Get ready for this week's TSX stock review, where NorthFlow Finance AI breaks down the top 17 stocks from June 15th. Don't miss it. We're taking a look at AlphaMin Resources, listed as AFM.V, where we detected a signal on June 15, 2026. This signal was a MACD bullish crossover combined with a significant volume surge, which really got our attention as a potential buying opportunity. The MACD bullish crossover is a technical indicator that suggests a shift in momentum to the upside, and when combined with a volume surge of over 337.8%, it's a pretty strong signal that investors are taking notice of this stock. At the time, the RSI was at 60.7, which isn't overly extended, so there was still room for upside potential. This signal was particularly interesting because it indicated a potential trend reversal, and with the volume surge, it seemed like investors were starting to take notice of AlphaMin Resources. This week, the stock gained 4.2%, opening at $144, reaching a high of $151, and a low of $139, before closing at $150. This performance definitely validates the original signal, as the stock has continued to move higher. The fact that it was able to hold onto most of its gains for the week is also a positive sign, suggesting that investors are still interested in this stock. There was some recent news that likely contributed to this week's performance, as AlphaMin Resources released strong Q1 2026 earnings, and also announced a dividend, which is always a positive catalyst for a stock. This news likely helped to drive investor interest and push the stock higher, and it's no surprise that we saw a gain of over 4% for the week. The combination of strong earnings and a dividend announcement is a great sign for investors, and it's likely that this news will continue to support the stock in the coming weeks. As we look ahead to next week, viewers should watch for whether AlphaMin Resources can continue to build on this momentum, and also keep an eye on any potential resistance levels that the stock may encounter. We'll also be watching to see if the MACD bullish crossover can continue to propel the stock higher, and if the volume can remain strong. Now let's move on to our next stock. We're taking a look at stock number 2 of 17, NCX.V, where we detected a signal on June 15. This signal was a MACD bullish crossover combined with a volume surge, which is a pretty strong indicator of potential upward movement. The MACD bullish crossover plus volume surge signal is a technical indicator that suggests the stock's momentum is shifting to the upside, and the volume surge confirms that there's significant interest in the stock. At the time, the RSI was at 56.2, which isn't overly bullish, but the volume surge of 181.0% was a clear indication that something was happening. This signal told us that it might be a good time to get into the stock, with an entry price of $3.02. This week, however, the stock declined by 8.0%. It opened at $3.01, reached a high of $3.15, and a low of $2.77, closing at $2.77. This performance doesn't exactly validate the original signal, but it's not a complete reversal either, so we'll need to keep an eye on it. The decline could be a normal correction after the initial surge, but we'll need more data to confirm. There's been some recent news that might be relevant to the stock's performance, with some analysts suggesting that Northall Copper and Gold's cash burn situation isn't as worrisome as it seems. This could be a factor in the stock's recent decline, as investors may be taking a closer look at the company's financials. Looking ahead to next week, we should watch for whether the stock can bounce back from this decline and whether the MACD bullish crossover signal will hold up. We'll also want to keep an eye on the company's cash burn situation and see if it becomes a bigger issue for investors. Now let's move on to our next stock. We're taking a closer look at stock NG.TO, where we detected a signal on June 15. This signal was triggered by a MACD bullish crossover combined with a significant volume surge, which caught our attention as a potential buying opportunity. The MACD bullish crossover indicates a shift in momentum, where the short-term moving average crosses above the long-term moving average, suggesting a potential uptrend. At the time, the Relative Strength Index, or RSI, was at 49.0, which is relatively neutral, and the volume surge of 56.7% further reinforced the bullish signal. This combination of indicators suggested that NG.TO was poised for a potential price increase. This week, the stock declined by 0.1%, opening at $11.16, reaching a high of $12.35, and a low of $10.82, before closing at $11.15. Although the stock didn't make significant gains, it's worth noting that the overall trend remains intact, and the signal is still valid. The weekly performance can be seen as a consolidation phase, which is a normal part of any uptrend. In recent news, the gold industry has been highlighted by Zacks, mentioning several key players, including NovaGold Resources, which is the company behind NG.TO. This industry outlook suggests that the gold sector is gaining attention, which could be a positive sign for NG.TO, despite its relatively flat performance this week. As we look ahead to next week, viewers should watch for any follow-through on the bullish signal, and whether the stock can break above its recent high of $12.35. We'll also be keeping an eye on the overall gold industry trends and how they may impact NG.TO's price movement. Now let's move on to our next stock. We're taking a closer look at Metalla Royalty and Streaming stock, ticker symbol MTA.V, where we detected a signal on May 27. The signal we detected was a moving average golden cross coupled with a significant volume surge. The moving average golden cross is a bullish indicator that suggests a potential trend reversal, and when combined with a volume surge of 155.9%, it indicated strong buying pressure and a possible shift in investor sentiment. At the time of the signal, the Relative Strength Index, or RSI, was at 55.8, which is not overbought, leaving room for further upside. This signal suggested that Metalla Royalty and Streaming was poised for a potential breakout, with our entry price at $10.09. This stock declined 7.3% this week, opening at $10.47, reaching a high of $11.33, and a low of $9.69, before closing at $9.70. Despite this decline, the stock still showed some resilience, bouncing off the lows, which may indicate that the original signal still has some validity. However, the decline does raise some questions about the stock's ability to maintain its upward momentum. The weekly performance was somewhat disappointing, but it's not entirely unexpected given the volatility in the market. Metalla Royalty and Streaming recently reported a profitable quarter with higher revenue, which is a positive development, but the market reaction was somewhat muted, with the stock trading down after hours. This mixed reaction may have contributed to the stock's decline this week, as investors weighed the company's strong financial performance against other market factors. The company's ability to generate profitable growth is a key factor in its long-term success. As we look ahead to next week, viewers should watch for whether Metalla Royalty and Streaming can regain its upward momentum and break through the $11 level. A strong bounce back from the current levels could validate the original signal and suggest further upside potential. Now let's move on to our next stock. We're taking a look at stock number 5 of 17, which is AC.TO, and the signal was detected on May 21. This signal was particularly interesting because it was a combination of a MACD bullish crossover and a significant volume surge. The MACD bullish crossover is a technical indicator that suggests the stock is gaining momentum, and when you combine that with a volume surge of 61.4%, it's a pretty strong signal that investors are taking notice of this stock. At the time, the RSI was at 66.0, which is getting into overbought territory, but the signal was still bullish. The entry price was $19.69, so it was a good opportunity to get in on the ground floor. This stock had a great week, gaining 6.3%, and it's clear that the momentum is still building. It opened at $22.15, reached a high of $24.25, and a low of $21.82, before closing at $23.55. This performance definitely validates the original signal, as the stock is continuing to trend upwards. There's been some recent analysis suggesting that Air Canada's stock valuation is looking good after the recent share price momentum, which is likely contributing to the stock's continued growth. This is a great sign for investors, as it indicates that the stock's fundamentals are strong. The recent momentum has investors taking a closer look at the stock's valuation, and so far, it's looking positive. As we move forward, viewers should keep an eye on whether this momentum can be sustained, and if the stock can continue to break through new highs. We'll be watching to see if the technical indicators continue to support the bullish trend, and if the fundamentals of the company can keep up with the stock's price. Now let's move on to our next stock. We're taking a look at stock number 6 of 17, AMX.V, where we detected a signal on May 12, 2026. This signal was triggered by a moving average golden cross, combined with a significant volume surge, which caught our attention as a potential buying opportunity. The MA golden cross, where the short-term moving average crosses above the long-term moving average, is often seen as a bullish signal, and when paired with a volume surge of over 1,031.7%, it suggested strong momentum behind the stock at the time. With an entry price of $5.15 and an RSI of 55.4, the conditions seemed favorable for a potential uptrend. The volume surge indicated a significant increase in investor interest, which can often be a driving force behind a stock's price movement. This week, however, AMX.V declined by 1.5%, opening at $4.55, reaching a high of $5.10, and a low of $4.44, before closing at $4.48. This decline may raise some concerns about the validity of the original signal, as the stock has not continued its upward momentum. Despite this, it's essential to consider the broader context and not make any hasty decisions based on a single week's performance. The stock's ability to bounce back from its low will be an important factor to watch in the coming weeks. In recent news, Amex Exploration has begun a significant drilling program at Perron West in Ontario, which spans 15,000 meters. This development could be a crucial factor in the stock's future performance, as drilling programs often have the potential to lead to significant discoveries and subsequent price movements. Although the stock's weekly performance may not immediately reflect the excitement around this news, it's an important factor to keep in mind for future developments. As we look ahead to next week, viewers should keep an eye on whether the stock can regain its momentum and bounce back from this week's decline. A strong rebound could validate the original signal and suggest that the stock is poised for further growth. Now let's move on to our next stock. We're looking at stock number 7 of 17, which is HSTR.V, and the signal was detected on June 16, 2026. This signal was particularly interesting because it indicated a potential buying opportunity for investors. The MACD bullish crossover plus volume surge signal that we detected on June 16 was a strong indicator that this stock was about to make a move upwards, and with the RSI at 42.7, it suggested that the stock was not overbought, making it a good time to enter. The volume surge of 74.5% also showed that there was a lot of interest in the stock, which can be a good sign for future growth. At the time, this signal meant that the stock had the potential to break out and continue upwards, making it a good opportunity for investors to get in. This week, however, the stock declined 7.4%, which may seem counterintuitive given the signal we detected last week. It opened at $1.90, reached a high of $1.99, and a low of $1.75, closing at $1.76. Despite this decline, it's still early days, and we need to see how the stock performs in the coming weeks to determine if the original signal was valid. The decline could be a normal correction after the volume surge, and we'll be watching to see if the stock can bounce back. There was some positive news recently, with HSTR.V being mentioned as one of the TSX growth companies with high insider ownership, which is a good sign for investors, as it shows that the people running the company have confidence in its future. This could be a factor in the stock's future performance, and we'll be keeping an eye on it. The fact that the company has high insider ownership could help to stabilize the stock and prevent large declines. Looking ahead to next week, we'll be watching to see if the stock can bounce back from this week's decline, and if the MACD bullish crossover signal will be validated. We'll also be keeping an eye on the volume to see if the interest in the stock continues, and if it can push the price back up. Now let's move on to our next stock. We're looking at stock number 8 of 17, which is SCZ.V, and the signal was detected on May 12, 2026. This signal was triggered when we saw a moving average golden cross along with a significant volume surge, which caught our attention. The MA golden cross plus volume surge signal is a bullish indicator that suggests a potential trend reversal, and at the time, it meant that the stock was gaining momentum and attention from investors, with the relative strength index or RSI at 60.9, which is not overly extended, and a volume surge of 53.9%, indicating strong buying interest. This signal was particularly interesting because it suggested that the stock was breaking out of a consolidation phase and was poised for further gains. The entry price at the time was $12.86, which seemed like a good value given the underlying fundamentals. This week, however, the stock declined 10.5%, which is a significant drop, and it opened at $10.88, reached a high of $11.65, and a low of $9.62, closing at $9.74. This performance is a bit concerning, as it suggests that the original signal may not have been as strong as we thought, and the stock may be experiencing some profit-taking or consolidation. The decline was quite sharp, which may have been triggered by some profit-taking or a broader market correction. Despite this, the stock is still holding above its recent lows, which is a positive sign. In recent news, there's been a lot of buzz about undiscovered gems in Canada to watch this June, and SCZ.V has been mentioned as one of the potential hidden gems, which could be a positive catalyst for the stock in the coming weeks. This news could be a potential game changer for the stock, as it brings more attention to the company and its underlying fundamentals. As we look ahead to next week, we'll be watching to see if the stock can bounce back from this week's decline and whether it can regain its upward momentum, and we'll also be keeping an eye on the broader market trends to see if they'll have any impact on SCZ.V. Viewers should keep a close eye on the stock's volume and relative strength index to see if it can break out of its current range. Now let's move on to our next stock. We're taking a closer look at stock number 9 of 17, TXG.TO, where a signal was detected on June 17th. The signal we're focusing on here is a combination of a moving average golden cross and a significant volume surge, which is a pretty strong indicator of potential upward momentum. The moving average golden cross, as you know, occurs when the short-term moving average crosses above the long-term moving average, and when it's paired with a volume surge of 125.6%, it's a pretty compelling signal. At the time, the RSI was at 53.0, which is relatively neutral, so this signal was particularly noteworthy. The entry price at the time of the signal was $62.63, so we were looking for a potential breakout. This week, however, the stock actually declined by 3.7%, which is not exactly what we were hoping for. It opened at $60.42, reached a high of $65.67, and a low of $57.65, before closing at $58.17. Despite the decline, we're still watching to see if this is just a minor setback or if it's a sign of something more significant, and whether the original signal still holds any weight. There was some news this week that may have contributed to the decline, with some questions being raised about the quality of Torex Gold Resources earnings, which could be a concern for investors. This news may have added to the uncertainty and volatility we saw in the stock's price this week. Looking ahead to next week, we'll be watching to see if the stock can bounce back from this decline and whether it can regain its upward momentum. We'll also be keeping an eye on any further news or developments that could impact the stock's price. Now let's move on to our next stock. We're taking a look at stock number 10 of 17, SSRM.TO, where a signal was detected on June 17th. The signal we're talking about here was a moving average golden cross, combined with a significant volume surge, which is always an interesting combination to see. The moving average golden cross plus volume surge signal is a strong bullish indicator, suggesting that the stock is about to see a significant upward movement, and with the volume surge of 79.5%, it was clear that there was a lot of interest in this stock at the time. With the RSI at 57.1, it wasn't overbought, so there was still room to run. This signal typically indicates that the stock is transitioning from a downtrend to an uptrend, and the volume surge confirms that there's strong buying interest behind the move. The entry price at the time was $44.79. This stock had a great week, gaining 7.0%. It opened at $40.68, reached a high of $47.44 and a low of $40.08, closing at $43.54. This performance does seem to validate the original signal, as the stock has continued to move upward, although it's worth noting that it did close below the high for the week. The stock's ability to hold onto its gains is a positive sign, and it will be interesting to see if it can continue to build on this momentum. There's been some recent news that may have contributed to the stock's performance, with SSR Mining stock surging again, likely due to a combination of factors, including the overall strength of the sector and some positive developments for the company. This recent surge in the stock price may be a sign that investors are becoming more optimistic about the company's prospects, and we'll be keeping a close eye on this story to see how it unfolds. Looking ahead to next week, we'll be watching to see if SSRM.TO can continue to build on this momentum, and whether the stock can break through the $50 barrier. Viewers should keep an eye on the stock's volume and RSI, as these will be key indicators of whether the stock can sustain its current trend. Now let's move on to our next stock. We're looking at stock number 11 of 17, Eldorado Gold, or ELD.TO, where we detected a signal on May 26, 2026. This signal was triggered when the stock's moving averages formed a golden cross, accompanied by a significant volume surge. The MA Golden Cross plus volume surge signal is a bullish indicator that suggests a potential trend reversal, and at the time, it looked like Eldorado Gold was poised for a breakout, with the RSI at 61.9 and volume surging by 223.9%. This signal typically indicates that a stock is gaining momentum and may be ready to move higher. The combination of the golden cross and the volume surge made this signal particularly compelling, as it suggested that the stock had strong support from investors. This week, however, Eldorado Gold declined by 2.1%, which may seem counterintuitive given the bullish signal we detected last week. The stock opened at $45.77, reached a high of $51.02, and a low of $44.52, before closing at $44.81. Despite this decline, the stock's price action is still relatively close to our entry price of $44.85, so it's too early to say whether the original signal was invalid. There's been some recent news about Eldorado Gold starting copper production at its McIlvenna Bay project, which is a positive development, but the company's valuation still lags behind its peers, which may be contributing to the stock's recent decline. This news could be a catalyst for future growth, but for now, it seems like the market is waiting for more evidence of the company's progress. As we look ahead to next week, viewers should watch for whether Eldorado Gold can regain its momentum and break out above its recent highs, and also keep an eye on any further updates from the company about its production and valuation. If the stock can build on its recent news and start to attract more buyers, we could see a significant move higher. Now let's move on to our next stock. We're taking a look at Hemlo Mining, stock symbol HMMC.V, where we detected a signal on June 18, 2026. This signal was triggered by a combination of a moving average golden cross and a significant volume surge, which caught our attention as a potential buying opportunity. The moving average golden cross, combined with a volume surge of 69.4%, indicated a potential trend reversal, suggesting that the stock might be gaining momentum and moving upwards. At the time of the signal, the Relative Strength Index, or RSI, was at 53.1, which is relatively neutral, but the volume surge and the golden cross suggested that there was some underlying strength in the stock. This signal was particularly interesting because it indicated a potential shift in investor sentiment, with the increased volume suggesting that more investors were taking notice of the stock. This week, Hemlo Mining declined by 0.5%, which may seem counterintuitive given the signal we detected last week. The stock opened at $6.50, reached a high of $7.24, and a low of $6.36, before closing at $6.47. Despite the decline, the fact that the stock was able to hold above the $6.36 level suggests that there is still some support for the stock, and the signal may still be valid. In recent news, Hemlo Mining announced that it's joining the TSX and relocating its corporate base to Ontario, which could potentially lead to increased visibility and investor interest. This move could be a positive development for the stock, and it will be interesting to see how the market reacts to this news in the coming weeks. The company's decision to move its corporate base to Ontario may also lead to increased access to capital and other resources, which could help to drive growth. As we look ahead to next week, viewers should watch for whether Hemlo Mining can build on the momentum suggested by the golden cross and volume surge, and whether the company's move to the TSX will lead to increased investor interest. We'll also be keeping an eye on the stock's RSI, to see if it starts to move upwards, which could confirm the bullish signal we detected last week. Now let's move on to our next stock. We're taking a closer look at NIQ.V, a stock that caught our attention when a signal was detected on May 26, 2026. This signal was triggered by a combination of a moving average golden cross and a significant volume surge, which is always an interesting combination to see in the market. The MA golden cross, as you know, is a bullish indicator that occurs when a shorter-term moving average crosses above a longer-term moving average, and when combined with a volume surge of 63.2%, it's a pretty strong signal that something's brewing with this stock. At the time, the RSI was sitting at 54.1, which is relatively neutral, so it wasn't overbought or oversold, and the entry price was $2.37. The volume surge was the real story here, as it indicated a significant increase in investor interest, which can often be a catalyst for further price movement. This week, however, NIQ.V declined 1.4%, opening at $2.17, reaching a high of $2.31, and a low of $2.09, before closing at $2.14. This decline doesn't necessarily invalidate the original signal, but it does suggest that the stock may be experiencing some near-term resistance. It's also possible that the stock is simply consolidating before making its next move, so we'll need to keep a close eye on it. In related news, Magna Mining Inc. recently reported strong revenue growth in their first quarter 2026 earnings call, which could have a positive impact on the sector as a whole. This news may not have had a direct impact on NICU.V's weekly performance, but it's definitely worth noting as we move forward. As we look ahead to next week, we'll be watching to see if NICU.V can bounce back from this week's decline and regain some momentum. We'll also be keeping an eye on the broader market trends and how they may impact this stock's performance. Now let's move on to our next stock. We're taking a look at stock number 14 of 17, QNC.V, where we detected a signal on June 18, 2026. This signal was triggered due to a moving average golden cross combined with a significant volume surge. The MA Golden Cross Plus volume surge signal is a strong indicator of a potential trend reversal, and at the time, it suggested that QNC.V was poised for a breakout, given the RSI was at 50.0, indicating a neutral position, and the volume surge was up 240.4%. This surge in volume, combined with the golden cross, implied that there was significant buying interest in the stock, which could propel it higher. The entry price at the time was $4.51, and we were looking for the stock to build on this momentum. This week, QNC.V gained 6.2%, opening at $4.22, reaching a high of $4.77, and a low of $4.21, before closing at $4.48. This performance is a positive validation of the original signal, as the stock has continued to trend higher. The move higher this week suggests that the buying interest is still present, and the stock is maintaining its upward momentum. In recent news, Quantum Emotion has made a significant acquisition, buying up SKV and Jet Lab Technologies, which is expected to make them a full-stack cybersecurity provider. This acquisition could be a major catalyst for the stock's recent performance, as it expands their offerings and capabilities in the cybersecurity space. The market seems to be reacting positively to this news, which is likely contributing to the stock's upward trend. Looking ahead to next week, we'll be watching to see if QNC.V can continue to build on this momentum, and whether the acquisition news will lead to further buying interest. We'll also be keeping an eye on the stock's volume and RSI levels to see if they remain supportive of the uptrend. Now let's move on to our next stock. We're taking a closer look at BBUC.TO, a stock that caught our attention when a signal was detected on June 18. This signal was triggered due to a combination of factors, which we'll dive into in a moment. The MA Golden Cross Plus volume surge signal is a pretty significant indicator, as it suggests a potential shift in the stock's trend, with the volume surge adding extra weight to this signal. At the time, the RSI was at 58.2, which isn't overly high, and the volume surged by 59.0%, indicating a lot of interest in the stock. This combination of factors made for a compelling entry point, especially with the entry price being $46.76. This week, BBUC.TO gained 1.4%, opening at $45.47, reaching a high of $47.94, and a low of $44.92, before closing at $46.12. This performance is relatively modest, but it does validate the original signal to some extent, as the stock has managed to stay above its entry point. However, it's worth noting that the gains were somewhat limited, which might be a sign of some underlying uncertainty. In recent news, Brookfield has agreed to sell one of its subsidiaries, a major builder, to a Japanese company for $650 million, which could have some implications for BBUC.TO's future prospects. This deal might be seen as a positive move, as it allows Brookfield to focus on its core operations and potentially allocate resources more efficiently. The fact that the stock price didn't react too strongly to this news might suggest that investors are still waiting to see how this will all play out. Looking ahead to next week, viewers should keep an eye on how the stock responds to any further developments related to this deal, as well as any changes in the broader market trends. We'll be watching to see if BBUC.TO can build on its recent gains and continue to validate the original signal. Now let's move on to our next stock. We're reviewing stock number 16 of 17, IFOS.V, where a signal was detected on June 18, 2026. This signal was triggered due to a moving average golden cross along with a significant volume surge, making it a stock worth keeping an eye on. The moving average golden cross plus volume surge signal is a strong indicator of a potential trend reversal, and when it occurred, the relative strength index or RSI was at 41.8, which is relatively neutral, and the volume surged by 30.9%, indicating a high level of interest in the stock at that time. This combination of factors suggested that the stock might be poised for a move upwards. At the time of the signal, the entry price was $2.58, which seemed like a good point to get in. This week, IFOS.V declined by 0.8%, opening at $2.62, reaching a high of $2.72, and a low of $2.54 before closing at $2.60. Despite the decline, the stock's ability to stay above the $2.50 level is a positive sign, validating the original signal to some extent. The stock's resilience in the face of overall market conditions is also worth noting. In recent news, Itafos and Rio Tinto have amended their sulfuric acid contract, which could have implications for the company's operations and revenue. This development may have contributed to the stock's weekly performance, as investors adjust their expectations based on the new agreement. Looking ahead, viewers should watch for whether the stock can regain its upward momentum and break through the $2.70 level, and also keep an eye on any further news related to the amended contract. The company's ability to navigate the changing market conditions will be crucial in determining the stock's future performance. Now let's move on to our next stock. We're wrapping up our review of 17 stocks with Energy Fuels, ticker symbol EFR.TO, which had a signal detected on June 18. This signal was particularly interesting, so let's dive into the details. The MACD bullish crossover plus volume surge signal that we detected on June 18 was a strong indicator that this stock was about to make a move, and with the volume surging by 117.1%, it was clear that investors were taking notice. At the time, the RSI was at 45.1, which is relatively neutral, but the MACD crossover suggested that momentum was shifting in a bullish direction. This combination of factors made for a compelling buy signal, and with an entry price of $23.42, it was an attractive opportunity for investors. This stock had a great week, gaining 5.3%, and it's worth noting that it opened at $22.24, reached a high of $23.60, and a low of $21.48, before closing at $23.42. This performance is a good validation of the original signal, as the stock has shown it can hold its value and even push higher. The fact that it was able to reach a new high for the week also suggests that there's still some upward momentum. Overall, it's been a solid week for Energy Fuels. In recent news, Energy Fuels has secured a conditional commitment of $725 million from the U.S. Office of Strategic Capital, which is a major development for the company. This news likely contributed to the stock's strong performance this week, as it provides a significant boost to the company's financial position and suggests that it's well positioned for future growth. This commitment is a vote of confidence in Energy Fuels' operations and could lead to further investment and expansion. Looking ahead to next week, investors should watch for any further developments related to this conditional commitment and how it may impact the company's operations and stock price. We'll also be keeping an eye on the stock's technical indicators to see if it can continue its upward momentum. That wraps up our weekly review. Subscribe for daily TSX signals from NorthFlow Finance. Thanks for tuning in, subscribe for more, and remember, this is not financial advice, consult a professional before making decisions.